Hey traders and investors, it's Serge Berger here. What I would like to talk about today, how it's important or why it's important to understand a little bit more about the bigger picture so that we can actually make higher probability trades with a little bit more conviction. If we look at the landscape year to date, we have commodity prices rising, with equities being more or less choppy to sort of downwardly moving slowly but surely, or at least have so far. More importantly, with this is the ratio. So we have relative strength, and I always talk about relative strength and how important that is, or relative weakness for that matter. We have relative strength in commodity prices. So you could do something very simple. You understand that commodities are going higher because the dollar is going lower, more or less. A dollar policy remains that of a weak dollar, and that at the margin, among other things, for example, inflation accelerating, is basically bullish for commodity prices. So if you look at this chart of the DBC, the beauty for the retail investors these days, and for any investor for that matter, is that we have ETFs that are very liquid, and that folks can track and see what the components are and all that stuff, and to get a better understanding. So look at the DBC, which it's just a commodity index. We can draw some very basic trend lines. And if you draw actually you have to zoom a little bit more, and you can see basically commodities here obviously have moved up since 2009, but there's been a big negative divergence, i.e. big underperformance on the part of commodities. If you just go back to the most recent sort of important double top high here, which basically goes back to September 2009, just a little bit before the big equities rally started that really defined 2013. Look at the downtrend from there that we have since broken to the upside here in February this year, all after making a higher low in January versus the low in June of 2012. So that, through a technical lens, is very bullish, and you can see this index is now trading above its 50, 100, and 200 moving averages, and is now sort of ready consolidating this move and ready to me, it looks like it's likely going higher. Now, the index itself, just like some of the gold ETFs and things like that, are actually quite boring to trade for the most part, unless you use options and some more leverage, or use some sort of double ETF and things like that, which I don't like too much. But what's important or interesting to understand is some of the single name stocks. So you see how I went from understanding the macro picture to looking at an index or a sector or an asset class chart in this case, and then going scaling down and really finding individual stocks. So not surprising, in some of the commodity stocks, which are more in the sort of materials type of sector, and if you look at the S&P 500, you can see here DuPont, ticker symbol DD, something I've been talking about to subscribers all year. It's a big heavy stock. It's not going to be a really juicy trading stock, but it is going higher, which is really better than a lot of things that have just basically collapsed this year already, particularly some of the momentum stocks and momentum industries that we all know. So if you didn't go in there a little bit deeper and look at DuPont, you could look at something like Monsanto, in the grains business, also obviously very commodities related, also holding up and actually looking fairly bullish here through the medium term lens. You can even look at things like U.S. Steel, also commodities related, materials related stock that at the margin doesn't look as great as some of the others, but you're seeing relative strength here. Stock that still looks like it can push higher at some point. It's holding some moving average, holding some trend lines. So those are the kind of things I try to look for when I sort of take a top-down approach on the market, looking for relative strength. Hope this makes sense. As always, if you got any questions, you can tweet me at my Twitter handle, which is SteadyTrader. Take care.